Hi. Obviously, you've heard a bit about the ATO's current aggressive stance towards chasing debt and lodgement, etc. And they've increased the amount of audits that they're doing on clients' activity statements or tax returns, etc. No one enjoys a phone call from the ATO, and whilst a lot of the audits can be routine, there's certain patterns that can trigger close attention from the ATO. So there's 10 particular red flags that I wanted to speak to you about. The first is large fluctuations in income or expenses. So sudden changes from year to year can look a little bit unusual or even suspicious. So be mindful of that. Obviously, there might be a genuine reason, and whether it's large contracts or a major write-off of expenses, etc. Just make sure everything's documented for yourself. The second is consistent losses year after year. If you keep declaring losses, that sort of raises questions with the ATO about whether it's profitable going forward or whether there's something not quite right. The third is high or unusual deductions. So claiming expenses that appear to be out of line with the industry averages, because the ATO have got now quite a bit of data over the years that they've collected in terms of what particular industry types generally have with particular respect to certain deductions. The fourth is excessive director or owner drawings. So large personal drawings, dividends, loans, etc. Can be a signal for what is referred to as Division 7A compliance, which is money that you've taken out of the business that hasn't been declared as income to you personally, either by way of wages, directors' fees, dividends, etc. The fifth is discrepancies between your activity statements and your tax returns. Obviously, if your financial accounts are in order, that should be okay, but if there are discrepancies because what you've lodged in activity statements may not match what you've lodged at the end of the year because of certain adjustments, just be mindful of that those activity statements would need to be adjusted if they're not accurate. 6 is cash-based or high-risk industries. If you happen to operate in one of those, so the ones that the ATO are particularly looking at are all the trades, cafes, hospitality, construction, beauty, etc. So those small businesses in those industries are under the microscope. 7 is large or unusual GST refunds. Now, there can be perfectly good reasons for that, but just be mindful that it could trigger an audit. So again, make sure you've got all your documentation in order, because you may have bought a large asset, vehicle, truck, some large equipment, etc. The 8th is payroll and superannuation irregularities. So making sure your payroll STP is lodged after it's reconciled, it's lodged on time, regularly. Your superannuation payments, you need to make sure you're making your SGC payments on time, because we find that it's actually some disgruntled employees that might be making the phone calls to the ATO. 9 is related party transactions and loans. So when you're loaning other entities that you might have, whether it's trusts, companies, SMSF, or family members, again, these loans must be at arm's length, properly documented, so everything is in order. And the final one is your lifestyle not matching what income you've declared. So if you're declaring a very small income, but your lifestyle suggests that you're generating a bit more income, then that could be a bit of a red flag to the ATO. Okay, so having a very nice home, cars, etc., and only earning $20,000 or $50,000 a year, that could be a bit of a red flag to the ATO. So make sure you keep accurate real-time records in your accounting systems and any other supporting documentation. Make sure you're regularly reconciling your BAS, your payroll, your financial statements. And when I say regularly, it has to be, constantly, weekly, monthly. Document any unusual events. So, you can present that to the ATO should there be any queries. And of course, seek professional advice and guidance. Don't think that, it's a business expense, it's okay, no one's going to worry about it. Make sure you are speaking to your accountant and advisor that, it does tick the box, and if there is something a little bit unusual, that, as I said, it is clearly documented. The bottom line is that the ATO don't necessarily expect perfection, but they expect transparency. So they expect you to be honest and open in dealings, and there can be honest mistakes made, but they expect that you can provide any information or documentation to support any of your claims. Hope you found this useful. I know it was a little bit longer than normal, but very important and very topical right now. So if you have any concerns or simply want someone to look over your accounts and your situation, feel free to reach out. That's exactly what we do. We're here to support. Thanks again for listening. Look forward to speaking with you soon. Bye for now.